I think we're in a bit of uncharted waters here. We're looking at some markets that have not seen this comprehensive, if you will, set of tariffs that were announced here this week. We did see some of that, of course, 6-7 years ago, and we did see some impacts of that 6-7 years ago. But as I recall, that was more targeted toward an individual country, in that case, China. This case is much more broad-based. China is still included, needless to say. But I think we have to acknowledge that there is some uncertainty here. There is some uncharted water effect, as I mentioned. I think from a producer standpoint, this is the way I would approach it, Stu, is that markets are always going to be volatile. We've just started the growing season here in April. This just is another ingredient, if you will, to that mix for volatility, that recipe for volatility, if you will. So how you view that? Well, let's look at your old crop first. I know that quite a bit of the old crop corn from 24 has been sold. Same for beans from 24. But those bushels, Stu, have no bottom. Backtrack a second. Those bushels have no floor underneath them at all. That floor was removed with the crop insurance harvest price period way back in October. And of course, we did see a good, healthy market rally into February. We did see producers reward that rally very well, as a matter of fact, Stu. But I still know that there's some bushels out there. How are you going to defend those bushels? And I would really strongly encourage your viewers to think about, what are my tools available to defend my balance sheet on any remaining old crop? Let's get those ducks in a row. Here's a thought, Stu, that just came to my mind here recently. The program payments that just came out, I believe they're called ECAP funds. A producer may want to consider allocating, if you will, a portion of those funds to maybe buying a put option on old crop corn, or maybe just forward price old crop corn if your basis is at an attractive level, and buy a call option. My objective with that strategy, our objective with that strategy, Stu, is to get a floor underneath any remaining old crop you have, leave the upside open in case we get some type of firmness later this spring. New crop, I think guys have purchased quite a bit of insurance for 2025. On corn, it's a decent attractive level for actually a bit higher than last year. For beans, it's lower than last year. So at this point, there isn't a whole lot to do there other than maybe look at some short-dated options there. It might be something for a producer to consider instead of going all the way out to new crop December. There's nothing wrong with doing that, by the way, but might want to consider some short-dated options. The variables to keep an eye on, though, is what I would remind your viewers. Near term are Brazilian weather, tariffs, and U.S. weather. And I think in that order right now, because Brazilian weather is critical the next 6 weeks. If we get into the middle of May and the dry season has kicked in Brazil and they have not had any more moisture than they've had recently, probably going to see some pullback in production. The other side of that coin is if they get some moisture near term here, they could raise a big crop, bigger than last year, take away our exports starting in July and August. Weather market, Brazil. Number two, I would say tariffs is number two for the moment. And then our growing season, of course. So
we've seen a lot of our markets around the world be dinged by these tariffs, and a lot of them have indicated they would have some retaliation. Mexico and Canada, a little bit different case because they're in the USMCA, but Mexico's our biggest corn buyer. Canada's our biggest ethanol buyer. It seems like we still would have a lot of our agricultural production in jeopardy of sorts.
I don't disagree with that statement. I think in this time, it's a variable the producer obviously is aware of and must embrace that possibility. And I think the way to do that, or a way to do that, is to continue to think about defending your balance sheet. And I say, what's he saying, defending your balance sheet? Defending your balance sheet, Stu, is as simple as what tools are available to me to give myself protection on the downside as a grower of corn and soybeans, protection on the downside, but leave the upside open. I don't want to, as it were, paint myself into a corner and say, I'm going to sell this as a price I can make a profit at and be done. We always want to maximize our profitability on the operation, on the farm. So a way to do that, Stu, would be to utilize some type of risk management tool. There's a lot of different ones out there, but a tool that defends the downside. For example, purchase of a put option, defends the downside price, but leaves the upside open in case Brazil has a weather problem. The tariff situation is resolved. We do plant 95 or 96 million acres of corn, and we do raise the largest harvest ever, and we're looking at some significant pressure in the fall. So when I say defend your balance sheet, it doesn't mean be timid, it doesn't mean be scared, it means taking action as a grower to defend what you've worked hard to earn. And I think that we've had excellent rally on old crop corn from last fall into February. We saw some tremendous, when you look at gross revenue, my late brother used to always talk about gross revenue, and he's spot on. When you look at the yields, generally speaking, Stu, the yields we experienced last fall, and multiply that times the eventual price that a lot of folks sold for, not necessarily every bushel, but quite a few bushels there in December, January, and February. It's a good year for the 2024 crop. We've got it in the bank. Now let's look forward to 25. And if we do have any bushels left from 24, though, the market's given us a wake-up call that it can go lower. The last 45 days have shown us that. So let's defend any balance sheet risk we have with old crop, and let's turn our attention now to new crop with any opportunities that arise.
What have I not asked about that is important to this conversation?
I think you've covered the ground pretty well, Stu. I think just a grower at this point, I would leave with this comment, Stu. There's going to be quite a bit of noise in the markets for quite some time. And you can wake up in the morning and you can turn on your radio, you can look at your phone, you can turn on the TV. You're going to be hit as a producer with a lot of noise. Our objective is to work with you and say, let's tune out the vast majority of that noise, because that's a recipe for paralysis, I think, in many ways, Stu. When you're looking and you say, well, what happened overnight with this proposed tariff? What happened overnight here? What happened this? What happened that? And rather than execute your plan. So stay a very narrow focus, if you will. Tune out the noise to the very best of your ability. It's impossible virtually to tune out all the noise. You at least need to know what's going on. But to embrace every tidbit of information that you hear, whether it be on social media, or whether it be on the news, or whether it be, on your phone, is a recipe for overload on your mind. So tune out that noise, keep your mind focused, keep your goals focused, because I think in 2025, at this moment, Stu, one could argue that there's never been as much noise as we've got now with the world conflicts in the Black Sea, in Israel and so forth, tariffs, the volume of production that we're seeing now in Brazil. Brazil just harvested their record soybean crop. They've got the potential to harvest a very large corn crop. Uncertainty there, so on and so forth. There's a tremendous amount of information. You can get lost in that information, Stu. It's a danger from a producer standpoint, because then you'd be paralyzed. And markets have a way of changing very fast. And they can change very fast to the upside, and they can change very fast to the downside. So stay focused, defend your balance sheet, and use the tools that you're most comfortable with.